If you're trading futures, you have to know about futures rollover periods. Information in this video is for educational purposes only. It's not an offer recommendation to trade future stocks, options, or Forex. So what is futures rollover? I'm assuming you already know what a futures contract is. This is not for that. We have other videos if you need to know what that is, but this is assuming you already are aware of what futures are and how they work. But this is something you may not be aware of. So what is a futures rollover? It's the process of exiting a position in a contract close to its expiration date and entering a position in a contract with a later expiration date. Futures, by definition, have expiration dates, whether that could be monthly, it could be quarterly. It depends on the future that you're trading. And so it's just important to know when the product you're trading is expiring, and we will go through some of the reasons why. The rollover window is the period leading up to the rollover, and if you've ever traded a futures rollover, and you may have traded one and not been aware of it, liquidity can get a little weird. So understanding the expiration date for each futures contract is super important. It has a specific month and year for its date. We'll have a chart on the next slide, or maybe 2 slides, that'll show that. They have letters like for the March ES, like the S&P futures contract, it's ES H24. So for Q1, it's H24. It's not M for March. The summer one is actually M. So if you go off the letter in the contract, it may not naturally make sense. So you must be aware. And futures markets have standard cycles, monthly, quarterly, but oil is monthly. There's a lot of the commodities are monthly, so make sure you are knowing the contract that you're trading. Here is this is for the index or multiple indices, starting with 2022. This is what was on the CME website. And you can, depending on what you're trading, whether it be on the CBOT or the CME, you should be able to find this online. But it kind of shows the timing, right? So March 15th for 2024, June 21st of 2024, and then it has the roll date as well. So this is when people start rolling, and when liquidity and volume starts swapping between the 11th and the 15th. Trading can be kind of weird. I typically don't even like to day trade during these periods. And if I'm in a longer term futures position, I will roll it around here. But day trading can get funky. So being aware of these windows is super important. Why does it matter? Again, like I'm talking about right now, liquidity shifts. As liquidity shifts from the front month contract to the next one, trading gets weird. You're going to have to roll it, which is going to incur a cost. But you have to keep an eye on the volume between contracts. You always want to trade in the contract which has the most volume, because the most volume equals the most liquidity. And so that is, again, just important to know. And then physical delivery and settlement risks. If you're not aware, most brokers will send you an email or give you some sort of notification of, hey, you're in a position that expires soon. But say they don't, if you're not aware of the expiration date, you may get yourself into a physical delivery situation. Failing to roll over can lead to that, and you most likely are not wanting to take delivery. You're most likely using futures to trade. These products were originally made for commodities where farmers would hedge, but often do get physical delivery as well. So I'm assuming you don't want to do that. So make sure you do not get physical delivery, or you're going to get liquidation. Again, depends on your broker and depends on what's going on with their risk structure. But if your position's not rolled over, it may just be liquidated, and then you'll be out of position you meant to be in. So just another reason to stay on when rollover is. And I wanted to show in NinjaTrader what it looks like So if you have your starting window, control panel, to rollover contracts, you go to tools, and you go to database management, and it'll have, see, it has all these. It doesn't have any like the ES because it's not March. We're not in that window yet. But in these, it knows, the system just goes ahead and knows which one of these need to be rolled. And so it just has it all checked, and then you hit rollover. It'll give you this little thing. You roll over, and then that'll automatically change your charts or DOMs or whatever you're looking at. So it's kind of a small nuance within futures and how they work, but it is definitely important to know, especially if you're day trading the week of rollover. Not only do you need to rollover so you don't get physical delivery or any liquidated, but just making sure all your stuff is up to date is super important. So I hope this helped and you know more about futures rollover now.